Good morning and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be having a very interesting conversation, and this is not the usual trading days that we normally have. And the main reason I'm saying this is because there is currently forex intervention happening on the JPY pairs. So we know that the Japanese yen has been losing for quite a period now. Last week, we saw the USD JPY pair move from 154 and cross around 158. And then early this morning jumped to 160 before the Bank of Japan decided to intervene. And now we are seeing extreme volatility on USD JPY pair. So that and more of the current things happening in the markets. I will be covering all of them, trying to understand what are the key market movers this week, where should we focus, where should we be looking for opportunities. So good morning, Manabasto, and thank you. Thank you for joining the session. So today we will be starting with the economic calendar. So I'll go through the economic calendar, see the key events before we focus on other parts in the markets. So morning, Rosalind and J Squad, Michael, thank you guys. Thank you for joining. A good question, is this live? Yes, it's happening live. If you check your USD JPY pair, you should see the volatility happening right now. So from the economic calendar, we don't have much happening in the markets today. So the first major news will be the German preliminary CPI, which is a measure of inflation in Germany. And besides that, I don't think there's anything that is major on the calendar for today. However, later in the week, we should be seeing some major market moving news. One of them is manufacturing PMI from China, which is a measure of the manufacturing trends in China, which will be released at 4:30 a.m. on Tuesday. Then later on, we'll be having news coming in from the Eurozone, where we look at the CPI flash estimate, which is an estimate of the inflation in the Eurozone. We'll be looking at the GDP from Canada. Then later on, we'll having the Conference Board Consumer Confidence Survey from the US at 5 p.m. on Tuesday. The job market report from New Zealand at 1:45 a.m. on Wednesday. The ADP non-farm employment change, as well as the ISM manufacturing PMI for the US on Wednesday. Then the major news, and I think this is the most anticipated, will be the federal funds rate or the US interest rate decision, which will be happening on Wednesday at 9 p.m., closely followed by the FOMC press conference. So we'll also be getting CPI data from Switzerland, which is a measure of inflation in the Swiss economy. Then later on, unemployment claims. This is a weekly data released by the US. And of course, the non-farm payrolls on Friday. So remember, every first Friday of the month, this is when we normally see the non-farm payrolls. And this tends to be quite violent data announcement that causes a lot of volatility in USD pairs as well as gold and US equity indices. So that too will be on focus in the week. So besides that, we have more news coming in. We have a lot of companies that will be announcing their earnings this week. So if you just scroll through the earnings, you'll notice that there's quite a large number of companies that will be reporting. So today, before the market opens, we'll be looking at Domino's Pizza, Franklin Resources, Jinko Solar, ON Semiconductor, as well as Sophie Technologies. So there will be more companies reporting after the market close, and this includes tomorrow on Tuesday. Wednesday, there will be more companies, but the main focus is Amazon as well as Apple earnings. So Amazon has had a fantastic year. It's up more than 60% so far. And Wedbush analyst Scott David has an outperform rating for Amazon shares. So that will be on focus this week. And on top of that, we'll also be looking at Apple earnings as well as MasterCard. So there is quite a large number of things that are moving markets. But for now, I want us to shift focus and think about the Japanese yen. So the Japanese yen rebounded as much as 2% towards 155 per dollar on Monday after sinking as low as 160.2 earlier in the session. So remember, 160 Japanese yen per dollar is a level that was last seen in 1990. So we are talking about a 34-year high. So in hot markets regarded as a possible government intervention, as Japanese banks have been reportedly dumping dollars aggressively. Traders have been on alert for potential intervention from Japanese authorities for some time now, as the yen sank to a 34-year low and lost more than 10% against the dollar so far this year. So those losses came as the Bank of Japan refused to yield to market pressure last week, keeping interest rates unchanged. However, the Bank of Japan dropped wording on buying the same amount of bonds as before, revised its inflation forecasts higher, and said the economy will likely keep growing at a healthy pace. Current rates also pressured the yen as the Bank of Japan had rates at near zero levels, despite high borrowing costs in other major economies, prompting traders to borrow yen and invest in higher yielding currencies. So, for those who are new to this and are just seeing the current trade for the first time, I want us to talk about the major holders of United States Treasury securities as of January this year. So, the US issues bonds regularly, and this is weekly. And there's usually a large number of buyers from around the world, especially when interest rates are really high in the US. So as of today, the interest rates in the US are at between 5.25% and 5.50%. And that's considered a good return for a lot of funds, investors, as well as countries. So the biggest investors in US treasuries are currently Japan. So if you look at this, and this is in billions of dollars, then you can see that there is over $1 trillion invested by Japan in US treasuries. And the second biggest holder is China, followed by the UK. So what has been happening is that over the last 2 decades, or over the last 20 years, Japan has kept interest rates relatively low. And for the last 8 years, it was negative 0.1% before they recently hiked rates this year to positive 0.1%. So what this means is that capital is extremely cheap in Japan. So naturally, you'd find that if capital is very cheap in Japan, you will notice that investors will tend to borrow cheap from Japan and then invest this money in US treasuries. So when they do this, they basically take advantage of the divergence between interest rates between the Bank of Japan and the Federal Reserve of the US. So now that we are seeing that the Japanese yen is really sliding, and the Bank of Japan is changing its policy and it's now more focused at increasing interest rates, we are seeing this current trade beginning to collapse. So as a result of the weakening Japanese yen, a lot of investors have been speculating that the yen will continue losing and have been buying the dollar against the yen. But now we are seeing the Bank of Japan trying to support its currency. And the way it does this is basically buying the dollars and using the dollars to intervene in the currency market. So basically releasing dollars and absorbing the excess JPY in the markets. So this current intervention is designed to try and support the yen so that it doesn't lose so much. And a weakening yen is not very good for the Japanese economy. So a relative small weakening of the yen is good, but a 10% slide year to date is not very good for them. So in this case, that's why we are seeing the Bank of Japan intervening in the currency market. So that being said, I think it's time that we jump into technical analysis, try to understand what are the major trends, and see if there's any opportunities for the day. So as always, I will start with a disclaimer that this session is not investment advice. It's not a recommendation to trade. So you should always do your own analysis, do your own due diligence, and practice proper risk management. So from the chart, this is what we are seeing in the JPY currency pair. So I'll be starting by focusing on something we covered earlier in the week, that there was a familiar pattern where the yen would range along a very stable resistance, In this case, the resistance was around 151.8, and there was several times the USD was unable to break. There was an attempt at recovery, then attempting to recover against the dollar, and then eventually there was a break, which led to this strong rally. So after this rally, the pattern repeated itself. There was sideways movement, an attempt at recovery, and then eventually the breakout that happened late last week. So today we have woken up with a pretty big momentum. So if you check the momentum from last week on Wednesday to the current high we have seen today, this was a big currency movement, about 3.52%. Before the intervention began. And as you can see, the yen has literally moved from 160 all the way to 154 within a span of a few hours. So the last time we saw this happening was some time back. So I'll try and show you when we had a similar movement. And it seems almost a copy of what happened in the previous time. So the yen had weakened against the dollar and hit a level of 151.8 before the Bank of Japan decided to intervene. And after the intervention, we saw a very big drop following a couple of months. So in this case, within, I would say, 3-4 months, we had seen the yen strengthen about 16% against the dollar. And this was like 50% of the annual move. So at the beginning of 2021, what we saw is the yen losing by about 30%. This is that it almost 40%. And then after the intervention, it raised half of those gains. In this case, we had a 16% drop. So after this happened, then fast forward, you'll notice how the dollar continued gaining against the yen, topped here again at 151 before erasing some gains. And then for the better part of this year, we have seen the dollar continue gaining against the yen, breaking this multi-year resistance and rising all the way to 160. And now we have a similar candlestick as what we saw in the first intervention in 2021. So, sorry, 2022. So in this case, if you can see the similarity between this candlestick and the previous one, then you know that the Bank of Japan is not joking around. It's very serious about supporting its own currency. In this case, I expect some further slide in the dollar against the yen. So if you're trading these, notice that there will be extreme volatility. So take all precautions. Don't just jump in. You might lose a lot of money in this one. So besides that, we have other things happening in the markets. One of them is the US stock market recovery. So in the last week, we have seen a very strong rally happening in the US 30 or the Dow Jones. So we had already begun talking about a market correction. So from the most recent high to the most recent low, it was about 6.85% on the Dow. But then if you look at the actions of last week, there was a very strong rally followed by a drop and then a recovery, which made sure that the market closed on a high. So in this case, I expect to see some more recovery happening this week. So after the price action that we saw on Friday, then there's this expectation that this recovery continues, and perhaps today we could be seeing the market retesting last week's high. So in this case, the model is changing, and now the focus is on US recovery. And this follows a couple of companies that reported better than expected earnings last week, and this includes Meta as well as Google. So both companies reported better than expected earnings, and now they basically added positive sentiments in the markets. So after the big sell-off in the previous week, last week was positive, and this week we expect to see some further upside. So it makes more sense to be bullish on US equities, especially after last week. So I expect to see a continuation of this bullish momentum. Then for Brent oil, we are seeing some form of recovery happening here. So there was this big sell-off after we broke support around $88.79 per barrel. So there was a break, a retest, and a continuation downwards. But then after hitting this double bottom, we are seeing a trend emerging. The market is now forming higher lows. And now it seems more likely that the market is bouncing from this area and headed higher. So in this case, the potential is that the market bounces from here and now heads to the high that we had last week on Friday. So in this case, there's a small chance that the market likely heads higher and gets to 88.58 on low volatility today, since on Monday we don't usually have major moves. So as for Bitcoin, it seems more likely that the market is just moving sideways. So if you look at the recent price action, it doesn't show all that optimism. So there's a trend line emerging here, and yet another one emerging here, where the market is just moving sideways. And from the most recent price action, you can see there was an extreme bounce from this level here. We rallied to about $67,000 per Bitcoin. And once we got here, market started pulling back, and now we are approaching a support area of around $60,600 per Bitcoin. So this seems like a likely area to be looking for buys. So around this area here. So after we see this drop, there's a good chance that the market might be bouncing from this area. So European equity indices are also on a strong bullish rally. So after the big drop that we saw last week, then on Thursday, Friday, there was a very good bounce from this support area here. And now we are likely going to see the market retesting this area again. So that's for the Euro Stocks 50 cash index. For the French 40 index, it's also similar. So a big sell-off followed by a strong bounce, which means that now we are likely headed to the previous high of 8,251. And for the UK FTSE 100 index, we are seeing some further bullish momentum. So after this big pattern that looked like a loudspeaker was broken here, now it seems more likely that you'll see an extended rally in the UK benchmark index. So as for the major pairs, we are seeing the Euro USD moving on a sideways momentum. So this doesn't look at all like a unidirectional movement. So for the last, I would say 3 days, it's more of a sideways momentum. So it makes more sense to trade on the edges. That is, if the market hits any of the edges. So if we see the last week's high or the last week's low being broken, then that would mean a likely opportunity to trade. But as per the extremes, it doesn't make sense at all to be trading in between. So in this case, for now, if you look at what's happening with Euro USD, I would say if this was the high, sorry for that, trying to map the high here, and this was the low, then the overall price action for last week can be summarized with these two trend lines. On one side, we have a market that is extending highs and extending lows. So at some point, we'll be seeing the market approaching either of the two extremes. Then from there, it will make more sense to identify a trading opportunity. So for pound USD, we have seen a very strong bounce from this support of 1.23. So after this bounce, we can see that in summary, last week was extremely bullish for the pound USD. And now after breaking this resistance, this was the resistance then on Thursday. Friday, there was an attempt to break, which failed. And now on Monday, we have started with a clean break, followed by a retest of the same area. And now the expectation is a continuation of the same. So for short-term intraday trading, this seems like a nice target, 1.25, 752, and a potential extension to the previous high of 1.26675. So in this case, intraday trading, it makes more sense to follow the trend, and we could be seeing some further upside, especially as we continue seeing a weaker dollar in the market. So the dollar index has been ranging. It has been slowing down a little bit. And now with the actions happening with the USD JPY, there's an overall expectation that the dollar index continues weakening for the day. And a weak dollar index would mean that these currencies get to take advantage of the dollar weaknesses. So the euro could continue gaining, the pound could continue gaining, as well as Asian pairs like USD trading against the New Zealand. So in this case, the New Zealand dollar is making a strong recovery from this point, and now having broken this resistance. This was the highest price we saw last week on Friday, as well as on Thursday. So high price here, and now a break, a retest. So in this case, I expect to see some further continuation with a short-term target of 0.6, the round number around here. So For USD against the Swiss franc, there has been very strong resistance here. The dollar has attempted several times to break this area and failed. So last week, we identified a short selling potential position here. We also identified it here after the market failed to break the area. So there were several retests of the same area. The market kept attempting to break, failed in each time. And now this morning, you can see that there was a very strong rejection of the same area following this red candlestick here. So a long tail towards the upper side, rejected, and now the market is headed lower. So it makes more sense to trade with this resistance, targeting that the market would drop to at least the support area. So as for USD CAD, we are seeing a pretty weak dollar. So in this case, the dollar has managed to break the support area here. So it attempted to break last week on Friday, failed, moved back upwards. And now another attempt, and there's a good chance we could be seeing the market eventually completing this journey and dropping to 1.36108. So as for gold, we are seeing gold enjoying some good momentum following a weak dollar in the market. So after this pullback that we saw last week on Friday, there was a strong bounce at 23.24. And now we have erased all the losses we had seen in the morning, which means that now it's more likely that gold continues pushing higher and eventually gets to at least last week's high and this support here, which is a price level of 23.55. So that's it for the day. I'll be checking in on the questions to see if you have raised a couple. And once we cover this, hopefully everyone will approach the day from an informed perspective. So, hello, Michael. And thank you for your response. Hello, Matilda, as well as Waridi. A request, kindly, is it possible to add Solana besides Bitcoin analysis? I'll be considering that on the next session. Hello, Robert. A good question from Robert here. What was Bitcoin halving and its implication on the Bitcoin? So Bitcoin halving is a cycle that happens every 4 years, where the reward that miners get from supporting the network is reduced by half. So what this creates is a scarcity. Remember, when miners mine Bitcoin, they need to pay their bills. So they will usually sell this Bitcoin in the market and then get dollars to pay their employees as well as pay other bills. So this leads to what we call inflation in the Bitcoin environment. And the more miners get, the more supply of Bitcoin there will be in the markets. And that tends to pressure price downwards. So when that mining reward is reduced by half, it creates scarcity in Bitcoin. And that scarcity leads to much higher prices. So from the last few halving cycles, it has always led to a strong bull run. So it doesn't happen immediately, but naturally you'll find that there's more scarcity in Bitcoin, leading to higher prices. So within 12 months after the halving, we usually have a very strong price rally. So morning, Boomba. So a good question from the username is All Sports TV. You mentioned on Friday that a bank holiday weakens its particular currency in some way. So Bank of Japan has a holiday. I'm wondering where the selling pressure is coming from, or is it liquidity sweep? So in this case, it's evidence of central bank intervention. So a central bank will not announce when it's intervening. So we only see that through the price action. So in this case, we are seeing the Bank of Japan, which is the central bank of Japan, basically mopping up excess JPY in the market. And in this case, it's leading to a strengthening of the yen. So it's not about the commercial banks in Japan. It's more about the central bank of Japan intervening in the currency market. So what is the possible direction of USD JPY today? The possible or the likely continuation is that the yen continues strengthening. So when the Bank of Japan decides to spend money, to spend basically dollars to mop up liquidity of the yen, It doesn't stop. It keeps doing it until it achieves its goals. And that often leads to panic in the markets. So a lot of traders who are basically betting against the yen are possibly going to get liquidated today, and they will be forced to cover their positions. And as a result of that, I expect to see some further strengthening of the yen against the dollar. Possible direction of Euro USD and USD yen. I think we have already covered that in the session. The yen is expected to continue strengthening. And of course, on the back of a weaker dollar, I expect the pound and the euro to continue strengthening. I think we already covered Bitcoin. So if you joined late, kindly just wait for the session to end and then review. It's live on YouTube and it's available. Once we end the session, the recording will be live. Is there a way to a Bitcoin miner? Yes, this requires some research on ASICs, ASICs. Kindly come up again on Bitcoin halving. As I mentioned with Bitcoin halving, it's basically miners or the people who support the network getting half the reward they were getting. And as a result, it creates scarcity in the market, leading to a strong price acceleration. So that's it for the day. Thank you very much, guys. And remember, the Bullish Banter podcast has gone into video format. So we have a new episode coming right up. It's available on YouTube as well as other podcast platforms. We have a new episode on the Financially Incorrect podcast. Make sure to check it out. So if you're just starting your trading journey, make sure to register for an account using the links below. And on top of that, I wish you a peaceful week. Remember, this session happens every day from Monday to Friday at 11 a.m. So make sure to like the video, subscribe to the channel so that you can get a reminder every time we have a live session. So thank you guys. See you then.